All right, I'm looking at StarBucks this weekend. So today on Friday, July 19th, stock had a pretty big move of 7%. Pretty big move, actually. It hasn't had this type of a move in a while. Very unusual, but this is news related. There's some activist investor who acquired a position and hasn't disclosed it yet. So that was the headline. But I want to talk about in general, like, is it a good spot to buy? Like, what's the trade? What are the levels to watch? And at what stage of the cycle this name is? Because we know this name is basically consumer. Basically, it's a discretionary spending, right? You can survive without coffee, right? You don't have to go get it from Starbucks. You can make it at home. But this is a dividend stock, okay? This is another name. But at the same time, yes, it is a growth stock. So I'm looking at like 10 years of a weekly chart for StarBucks, where we are at the moment 79. High was 126. And clearly, these are the standing out, like what is standing out right here on this chart. So I want you to pay attention to this rally in 2018, 2019, and then this rally from 2020 low all the way to 2021. These were pretty big rallies for the stock. And then we had this last rally from 2022. Technically, we had a bear market over there. Every rally, Fed had rates basically cutting. Right here, market panicked. 2018, 2019, they started cutting. And then here, market was flushing down, so they cut it to zero. Market rallied crazy, like a lot of they gave money to everybody out there, right? Stimulus stuff. And then as they started hiking rates, initial response was negative, right? A lot of names started coming down, including StarBucks. But to the point, even right here when stock was going up, Fed was starting to add. Let me show this one. Basically, starting to rate hikes, but they didn't slow down. A lot of people anticipation was okay. Fed is not gonna go higher than 2.5% or 3%, but they went to 5%, and then you can see what happened. And I compare this name with. Before we jump into the levels, I'll be just pretty quick with this one. You can overlay TLT, 20-year treasury bond. So let's just take a look at this one. Every time you see bond yields, I think it should be pretty clear, right? So if dividend stock is yielding less than the bonds out there, any bond you want to look at, short-term, long-term, medium-term, whatever you want to look at, if they're paying more, why people would risk out there when there's out there guaranteed fixed, in money markets, even like in your bank account, if you have a regional bank, they're giving you like 6.5% annually right now. Of course, inflation has declined a lot more, but anytime you see basically bond yields drop, you might see the StarBucks uptick, which makes sense, okay? And also, let's take a look at very quickly at the levels. This level of $70, $71, it was pretty pivotal support for almost 5 years now, okay? And it was breakout level, support. Of course, we're not looking at the COVID flash, but even then after that, this was acting as a support. 2022 support, and very recently after this pullback, support. But resistance for the stock is at the moment 85. That's what I'm watching, because after reporting earnings, it had a pretty big flushing move, and we have a gap, but ultra short term, decent volume today, but overall, am I just running into like buying this name? No. My point here is that it will give an opportunity. We are not in this cycle of, again, this is purely entertainment for entertainment purposes only. I'm not, by no means, I don't have a crystal ball to predict, but it is a very obvious trade for me. And I'm someone who is, hopefully, I would like to see this name at these $50 levels if it gets there. But again, they're about to report earnings. Okay, July, at the end of the July, they're about to report earnings. So if it gets beaten down, I'll be happy to acquire it over there. But I'm not somebody who's about to chase it here, because I know clearly these $83, $84 levels resistance, support is 72. So there is a $6 risk to potentially make a couple more dollars from here. I don't think it makes sense for me personally. Of course, they can beat the earnings, they can guide higher. I live in Seattle. I don't see any Starbucks being super busy. Even their like two like flagship roasteries that they have, I mean, those may be doing well. If they focus on those stores a little bit more and just maybe close down underperforming, because Starbucks at the moment like just trying to focus more on drive-through. Okay, they don't want people to dining in and just like me go with the computer, spend like 3 hours doing chart analysis and then having $5 coffee and leaving and using the all that real estate setup. They don't want that. They were closing a lot of stores actually, starting from the COVID. So I don't know. Maybe they will cut the dividend as well. You don't know what activist investors are gonna be pushing with this name, but I don't think the stock is gonna run away. This is very, very slow-moving name in general. Okay, it will give many opportunities to acquire. So my point is, there is no need to go 100% in. So that's my point. But that's the update. That's the video. I don't think I have ever covered Starbucks, but that's the update, because it's not that volatile of a stock. But last a few years, it has been actually. But that's what I'm watching for this name. Thanks for watching. Don't forget to like, and if you're new, subscribe. See you in the next one.